Hello and welcome to InvestorToday.ca. I'm your host, Dave Glover. InvestorToday.ca is brought to you in conjunction with RBL Communications. RBL Communications, your online IR specialists. Joining me today will be David Urban. David Urban is the true contrarian. He brings his many years in the financial services industry to bear here as an analyst on our regular monthly broadcast. Today our discussion will be Europe. The European crisis, how Greece is going to fare, and whether or not the United States of America, which also finds itself in a rather dire situation financially, can bear up as well. Another subject of our discussion today will be the 11 G20 countries still with a AAA rating. Canada being one of those 11 countries with a AAA rating. Will Canada be able to fare as we move forward in this current economic climate? Are we truly in a recovery? That is a big question for a lot of people, whether or not we're actually in a recovery, whether or not that recovery is moving forward or whether it has stalled. And also briefly, David and I will discuss our weekend. We spent the weekend at the PDAC, which is the Prospector Developers Association of Canada convention, the largest mining convention in the world. A lot of really positive news coming out of PDAC, a lot of high energy, a lot of companies gearing up for the newest season as we move forward with exploration. As David will tell you, he felt as though we're a 90% off sale, given the way some of these pricings fell. Is it time for investors to get back into the junior markets? We'll discuss that today and more. David, welcome, and thank you for joining us today.
Hi, Dave. Thanks for having me on the show.
Always a pleasure, David. We've had some pretty good feedback on some of our comments with regards to what we're doing with you and what we're doing here at InvestorToday.ca. But let's kick it right off if we can. One of the things you and I discussed the other day was this idea that the European crisis, it may be at a point where it's starting to subside. But, we look south of the border to the United States of America where you reside. And they're in quite a situation financially down there. Are they going to be able to pull themselves out of this crisis?
Well, I think in the short term we'll be okay, but in the long term we've really set ourselves up for another crisis on the magnitude and order of the 2007-2008 crisis, which locked up the banking sector and really hurt the financial market.
Right. Now, one of the things that came to my attention recently was the fact that Canada is one of only 11 G20 countries right now with a AAA credit rating. Is Canada going to be able to maintain its good credit rating given its relationship with the United States?
I think Canada will. One of the things that really impresses me about Canada and its economy and its people is their commitment to getting their house in order. And after the 2007-2008 crisis, they ran up the budget deficits a little bit in the ensuing aftermath. But the talk started in 2009-2010 of, all right, how do we get ourselves back to a balanced budget? And I think that's an important distinction between Canada and the United States. Canada is intent on putting their house in order, between getting their books in order. And yes, there are some, problems with pensions in certain provinces, but for the most part, there is a singular mindset of, we have to get our house in order, we have to fix the problems that we have. And that's in stark contrast to the United States, which seems to want to ignore the problems that are going on and to ignore, fiscal responsibility.
Well, how's that going to play out with investors, do you think? I mean, one of the things that came to a head in 2008 was the individual debt load. Yes, the country has run up a deficit, but personal debt has become something that the Bank of Canada talks about on a rather frequent basis. The fact that Canadians have woken up, if you will, from a financial slumber and are now, as you said, getting their houses in order. In 2008, we saw debt to personal income ratios very, very high. And, of course, that number has come down considerably since 2008. So Canadians are indeed paying off their debts. Are we seeing that in the United States as well?
To a certain extent at the individual level, we are seeing that. The problem is we have a number of housing markets and that are really stuck underwater. So even though we have record low interest rates, record low mortgage rates, consumers really, they're stuck. They can't go and refinance, and they can't go out and take out new debt. They're really in a catch-22, but we are seeing signs that they are paying it off at the local level, the individual level.
Mm-hmm.
Although in the last few months, personal credit has jumped to new highs. We'll have to see longer term what happens. I mean, I'm encouraged by some of the stuff at the individual level. The problem remains, though, Washington D.C. and their prolific spending.
Right. Well, there seems to be a lot of talk in the markets and out there on the street about gold being devalued. There's a real concerted effort on the parts of Ben Bernanke and other Central European governments, anyway, to try and keep the price of gold down as it pertains to currency values. Is that something we're going to see a continuation of, you think, David, or do you think gold is going to be able to break out from beyond these boundaries?
I think that for a good portion of 2012, it'll continue to be suppressed, and the price will continue to be pushed down. Mm-hmm. But I think as we go on later into this year, we're going to see, and I'm not sure of it yet, what the catalyst is going to be, but there will be a catalyst later on this year, and it'll be something similar to a few years ago when the Indian Central Bank decided that they were going to buy half of the IMF gold and effectively removed half of an overhang overnight, which sparked a 10% rally in the gold price. We'll see some event later on this year that is literally going to send gold and silver to new highs, either late this year or early next year. And I think when that happens, gold and silver investors are going to be pleasantly surprised, if not shocked, at what happened.
Well, speaking of gold and silver investors, you and I were at the PDAC this weekend, and one of the things you mentioned to me while you were there was it felt as though it were a 90% off sale. Can you give the listeners a little insight as to why you felt it was a 90% off sale?
Well, there was a number of junior miners on the floor that were selling at tremendous discounts to their NAVs and tremendous discounts to the value of the assets in the ground. I heard that from so many people across the board that, we have a great deposit, but, we can't get our stock price moving. And literally, it really did feel like I was at a sale. Mm-hmm. Because I ran into about 15 to 20 new companies that I had never known about before. Either they're just entering into production, they're into production, or they've got a fantastic deposit, and the market is severely discounting their stock prices.
Mm-hmm. Do you think is that to do with the fact that people are going into what they call the bigger markets to try and get some of the low-hanging fruit there? Or is there a real fear on the part of investors of getting into the junior markets? I mean, from my position, I think this is probably the best time for investors to just jump right back into the junior markets. As you said, the prices are very low, and the opportunity for a significant return is obviously very prevalent.
No, I think it's a little bit of both. I mean, one of the points that a lot of management I had made to a bunch of managements at the PDAC, and they agreed with me, was when you have companies like Goldcorp and Yamana able to replenish reserves for between 10 and 15 cents on the dollar, it takes a little bit of the air out of the junior market, because the idea that one of the majors is going to take out this great project of 3 to 5 million ounces, mm-hmm. It kind of pulls the air out from under that, and people are less likely to jump into the junior sectors because they see the success that companies like Goldcorp and Yamana are having. But you have to look at it on the good side. If you've got an economic project, if you've got a good-sized project, all of a sudden, with the stock price beaten down, that becomes a real buying opportunity for retail investors, mm-hmm. and institutional investors as well.
Well, graphite's the new phrase of the season, isn't it? Everyone wants to get into graphite, and they're looking for graphite everywhere. What do you think about graphite?
I'm interested in graphite, but for the most part now, I've been looking at the values in the gold and silver sector.
Right.
I like the economics in the graphite space. I like where that sector's going. But for right now, I'm just solely focused on gold and silver. I mentioned, I discovered 15 to 20 new companies coming out of the PDAC. And a week later, I'm still going over books. I'm still going over reports. I'm still going over presentations. I expect to be that way for the next 2 to 3 weeks because the valuations were just so attractive.
Well, I want to thank you for that, David, and I want to thank the listeners for tuning in. It's Tuesday, March 13th, 2012. I'm Dave Glover. This has been InvestorToday.ca. My guest, David Urban. Thanks again, David, for being here.
Thank you, Dave. And I'd like to, if you don't mind, I'll plug my website. It's www.atruecontrarian.com.
And that's David Urban, a true contrarian here at InvestorToday.ca, brought to you in conjunction with RBL Communications. We'll talk to you next month. Thanks for tuning in.
All right. Thanks, Dave.